really fallen quite hard, at least in the week gone by. Let's stay with markets. Ritu Arora, Chief Investment Officer with Canara HSBC OBC Life Insurance joins us. Ritu, good afternoon to you and thank you for joining us. Ritu, there seems to be some sense of disappointment post the budget. Everyone is of the view that the budget did not live up to the expectations.
Thank you for having me on the show. I personally think the budget is fairly balanced, pragmatic and functional budget. Of course, the expectations were euphoric. One was expecting a lot of one-time announcements which would change the trajectory of the country and the development. I don't think that has been met, and that was, I think, anyway over expectation. But it is reasonably balanced. It does come clean and give a good target on fiscal deficit, in fact a stiff target on fiscal deficit. There are efforts on infrastructure development, road, airport, water transport, housing. Those are positives in the budget. There's small savings coming back to financial markets. Efforts have been made to channelize that. And also on FDI, there's a little more comfort given to foreign investors to have the investments continue in India. So I think it has a lot of positives that the market is ignoring in anticipation of a budget which they were thinking would solve everything in one go.
Ritu, everyone is wondering that what could be the next big trigger for the market now, because this time around the earnings season is going to be pretty moderate. Earning budget is behind us. So what could be the next big trigger which markets would now latch on to or they would look forward to?
I think reality will give way and euphoria will give way to reality, and reality will dawn upon us as we see the numbers coming in. And fundamentals still remain stressed. So there's a lot of hope in the economy. There's a lot of momentum in the market. But I think in terms of valuations, we are quite richly poised. And I do not anticipate a very big positive trigger. Of course, monsoon and some improvement there would bring some relief to the market. But I think we will see sharp sectoral movement. We'll see stock-specific movement, but I do not see a directional big upside in the market in the coming few months. I would expect it to consolidate and be range-bound. Don't see a big correction either. So I just see sharp sector stock movements in this range of the market, plus minus 5-7%. But directionally, long-term, I think market has turned and now doesn't have a range-bound market, but we are in a directional market which over the next 3 to 5 years should give double-digit CAGR. There's a lot of pain along the way. There's a lot of reality one would have to acknowledge, and hence expecting the momentum we saw in the first 6 months with 20+% return in the next 6 months would be foolhardy.
So, Ritu, what according to you could provide that next trigger for the market which could perhaps take it higher? Would it have to be a rate cut by the RBI, which again is going to only come in perhaps 6 to 7 months from now?
I would like to start watching inflation numbers seem to be bettering, and IIP numbers as well for last couple of months seem to be stabilizing and showing improvement. I think those are tangible improvements that one would see in the economy. For me also it will be important to see how this budget that is as of now on the paper gets executed. It can become a very visionary budget if we actually see these things getting implemented and they start taking off over the next 6 months. It's just 8 months that this budget has to play out. I would think that would be a trigger. Monsoon would be a trigger, and so would Iraq crisis and the entire unrest around Middle East. And now that crude is cooling off, if we also saw the geopolitical tensions cooling off there, I think those would be positives for the market. It would also be positive for FII flows in the country.
So crude is down by a good $9-10 from the recent high. How come markets are not acknowledging that?
Yes, I think the entire focus has been away from fundamentals, only on the budget for a while now. We saw a rally pre-budget also. I think this will be a period, next couple of weeks when we see corporate results, would be a period where all other fundamentals will also come into focus. Unfortunately, not all are very promising. There are quite a few stressed fundamentals at this point in time. But one needs to keenly watch out for them because we cannot continue with this momentum just based on hope.
So where are you shopping? Where do you think there is still money left on the table?
It is going to to be a market where stocks will have very sharp movements, and one will need to do completely bottom-up analysis. It would not be prudent to just take sectoral calls. Sectors are pretty obvious, and if we believe that economy will improve over the next couple of years and infrastructure will take off and will be the backbone of that recovery, then the sectors remain obvious. Banking always would be the other side of the coin for economy, so banking remains in focus. But in general, many banks are at pretty high valuations at this point in time, and one would have to look for right entry points. I still prefer private sector over public sector there. Cap goods, infra, auto ank definitely are sectors, but stock selection is a challenge, and I think every correction gives an opportunity for entry.
Okay, Ritu, good chatting with you. Appreciate you taking the time out and speaking with us today. Still languishing for the market, although we've made a strong recovery from the lows of the day. Mid-caps now already in the green, up 2/10, and the Nifty is just nudging the green border at 7450 plus levels. But what about commodities? Let's bring on